What's up, guys? Good evening, good afternoon for you. How are you guys doing today? My live stream seems to be offline, but I think... Can you guys hear me or see me? There you go. There I am. But I think... There you go. So we are live. Welcome back. My boys and girls, welcome back to another live stream. How are you guys doing today? Did you kill it? Welcome back. Kathy K, Alpa Bavzar, Joy Pierre Louis, Basement Beauty. Basement Beauty. There you go. And me, there you go, Kathy. Welcome back, guys. Hello, Diamond SF77. Diamond is not located in San Francisco. He already told me that last week. Ray Bailey, Stephen Baker. If these kings could talk. Welcome back, guys. All right, please drop a comment down below. DJ Kid Gio, greetings. Hello, my friend. Please drop a comment down below, guys. Let me know what stocks do you guys want me to go over. I already have a request over here about SOFI, so let's talk about SOFI. So today we had some sort of mixed day in the markets. The Russell 2000 went down 0.80%. The NASDAQ, the same handful of stocks that have been doing the heavy lifting year to date, were the ones that once again did the heavy lifting today. So the NASDAQ went up 0.95%. The Dow Jones the Dow pretty much broke even. It went down 0.01%. And the S&P 500 went up 0.37%. The S&P had a 3-day losing streak, and it got it. The bulls were able to stop this 3-day losing streak that started out last Friday, if I remember correctly. Yes. Okay. If we take a look at the sectors of the markets, we can confirm what I just told you guys. So today we didn't have a positive day from a breadth standpoint. So the best performing sector today, consumer discretionary, led by Tesla and Amazon, goes up 1.28%. The tech sector, led by Microsoft and Apple, goes up 0.82%. And communication services, led by Meta and Google, went up 0.77%. After these three sectors, which, as I just said, are the ones that have been doing the heavy lifting year to date, we find two defensive sectors. So healthcare went up today 0.67%, and consumer staples went up 0.57%. However, yesterday we really saw a very clear rotation in the markets. So money came out from the year-to-date winners, so from these three sectors that I just told you guys about, and that money rotated into the non-winners year-to-date. Let's just put it that way. But take a look at the day that we saw today. So materials went down 0.25%. The industrial sector went down 0.73%. Also, the financial sector went down 0.78%, and energy went down 1.30%. So these are cyclical sectors, and these sectors should be the one that should be leading the way if we were actually in a brand new bull market. So that wasn't the case today, at least. Yesterday we had a better day, even though we had a red day across the board. If we take a look at the stocks that went up and down, we can confirm that today wasn't a positive day. So today we had 4,000 stocks pretty much going down and only 2,237 stocks going higher. So we have this situation, as I just told you guys, in which only a handful of stocks are doing the heavy lifting. And now the big question is, and I know that most of you guys are taking trades with the SPY, obviously. Same here. Now the question is, can these handful of stocks keep doing the heavy lifting forever without the participation of the other sectors of the markets, of the cyclical sectors of the markets? That is something that is still yet to be determined. When it comes to the SPY, the S&P 500, this is the ETF that tracks the S&P 500. The SPY went up today 0.36%. It closed the trading session at $436.51. So the closing of the week is going to be very important, guys. The bulls need to try to close at or above this white line that you guys can see over here, the 5-day moving average at around 438 bucks. And take a look at this, guys. If we take a look at the anchored volume weighted average price that comes from the Federal Open Market Committee that took place last week on Wednesday, take a look at the price, 438. Very, but very important spot in tomorrow's trading session. So I'm thinking that if the bulls happen to be able to open the trading session and close candles slightly above 436, $436.50, $436.40. They could be gathering momentum in order to fill this gap at 438. We can expect a good bull-bear battle. Maybe the bulls can open the trading session above 438, but that's hypothetical. As we are seeing the SPY right now, we can make the case that we are very likely to open the trading session tomorrow below 438. And if that happens to be the case, watch out for 438, because we have the convergence of the 5-day moving average and the anchored volume weighted average price that comes from the last Federal Open Market Committee. If the bulls can take out 438 and they can consolidate slightly above that area, then the next important gap to the upside is going to be 439.15, which happens to be last Friday's low. So these are the ranges, or the range, or this is the range that I am thinking about to the upside for tomorrow's trading session, and to the downside. Opening the trading session below 436 opens the door for a very important spot, 433.50-ish, $433.50, which happens to be today's low. And this is, in minor time frames, guys, a very important line of defense for the bulls. If 433.50 happens to be broken to the downside, and if the bears can hold the SPY below 433.50, then if this were the case, then this would open a different can of worms. And if that were the case, you have to keep an eye on my Discord channel, because you guys know that I am updating info about the SPY on a constant basis. So if this were the case, I am going to be providing you guys the corresponding numbers if 433.50 happens to be broken to the downside. So I have a bunch of requests over here. So let's start with SOFI. You guys were asking me, this was the first stock that you guys asked about. SOFI went down today 1.62%, and it closed the trading session at $8.50. What is going on over here, guys? So the bulls are still holding $8.20, guys. This is an important spot. $8.20 is a previous resistance back from early February. We can still make the case that SOFI is a bit far away from home base. Remember that when I talk about home base, I am talking about the 100-day moving average and also the 200-day moving average. Right now, SOFI is 31% above its 100-day moving average, and it is also, let me see over here, SOFI is 43% above its 200-day moving average. These moving averages tend to draw price in. So they kind of act like a magnet when any given stock is way above these two moving averages. So as of now, the bulls are consolidating above $8.20, which happens to be a good sign. However, in minor time frames, we can make the case that the bears have been making progress. And why do I say that? Because we used to have over here, or we were seeing before, an upward sloping 5-day moving average, and now the 5-day moving average is downward sloping. So this is proof that that sellers are starting to make progress over here. So this is a very important spot. If SOFI can consolidate slightly above $8.20, then this would imply that the bulls are gathering momentum in order to fill the next important gap. I am going to draw a line over here, and you guys know that I am improvising over here. I cannot prepare anything, so you guys are asking about stocks, and I am just improvising the technical analysis. So there's an important gap up to $9.77. So obviously, the 5-day moving average is going to be a potential area of interest resistance-wise, $8.90 approximately. The fact that the 5-day moving average is downward sloping implies that we can expect some sort of good bear-bull battle over here. If the bulls can take out $8.80, Then we have another gap up to $9.70, previous resistance back from June 16, and also previous resistance back from June 13. So let's do the math. If we happen to start a trade on SOFI from $8.30-ish, if this support of $8.20 keeps acting as such, so from $8.20 up to $8.80, up to the 5-day moving average, we're looking at a 6% profit trade, and up to $9.70, we are looking at a 15% profit trade. So a very important spot over here, that $8.20. If this support happens to be taken out by the bears, if this support happens to be broken to the downside, watch out for a further decline down to $7.60. This is a previous resistance back from early June. Let me take a look at the demand and the supply of SOFI technology. So what is the demand and the supply looking like? Let me see over here. Okay, let's see. What do I got here? And take a look, guys. A very, very positive market structure for SOFI. So remember, on the top of the chart, you guys can see the demand, so basically buyers. And on the bottom of this chart, you guys can see the supply, so sellers, buyers and sellers. So buyers on top, sellers on the bottom of the chart. And what we can see over here, we have an ascending demand that is way above the supply. The supply is decreasing and below average. So we can confirm that from a market structure standpoint, the buyers are still in absolute control of SOFI. So I would expect $8.20 to keep acting as support. So watch out for $8.80 and ultimately $9.70 if we happen to see another nice push to the upside for SOFI. AMD coffee. Let me take a look at advanced micro devices. So guys, I think that what triggered the sell-off that we are seeing as of now in the case of AMD was the CEO. I think that she was dumping shares last week. And as an institutional investor, let's just put it that way, if the CEO of any given company is selling shares at a 52-week high, I would be suspicious. And I would also be dumping shares. So full disclosure, I have a position as of now on AMD. My average cost, I have 75 shares, and my average cost is at around $112. So I am kind of holding the bag over here. We cannot make a bearish case still in the case of AMD. This is a major uptrend. We can see over here an upward sloping 100-day moving average, also an upward sloping 200-day moving average. However, remember the 5-day moving average. This white line that you guys can see over here, it is downward sloping. So that implies that sellers are starting to, let's say that sellers are starting to gain ground over here. Let's just put it that way. Today, AMD closed the trading session slightly below $111. $111 happens to be a previous resistance back from mid-May. And check this out, guys. I am going to pull up here an AMD chart on TradingView and get this. Let me show you. Alrighty, AMD, advanced micro. Take a look, guys. So at $111, we find the anchored volume weighted average price that comes from the last earnings report of AMD. Very, but very important spot over here. So the fact that AMD closed slightly below $111 is not necessarily a good sign. So I would be expecting the bulls to recapture $111 and maybe being able to gather momentum in order to fill the next important gap up to $115. When we talk about $115, I'm going to pull up here a 3-year chart. So let me show you guys. Okay, where is it at? Over here. There you go. Over here. So $115, guys, happens to be a previous resistance for AMD back from August of 2021. Very, but very important spot. So that is actually my price target in order to close the trade that I opened. So this is a very important spot for AMD. And I'm going to zoom in here on the 4-hour chart. And if the bulls fail at recapturing $111, there's another area of interest to the downside, support-wise, near $108. So if any of you don't have a position on AMD and you guys want to buy the dip, $108 could be the next support. $108 happens to be a previous support back from mid-May. Let me take a look, by the way, at the market structure of AMD. So what is supply and demand looking like over here? Let me see, advanced micro devices. What do I get here? Let me see and take a look, guys. We can confirm that buyers are starting to walk away from AMD. Remember, on the top of this chart, you guys can see the demand. So buyers, and take a look at how the demand is starting to decrease little by little. We can also make the case that the supply isn't rising, so the supply is also decreasing, which is some sort of an encouraging sign for the bulls. But ideally, we want to see the demand rising and the supply going down. I mean, it is going down, but the demand is also going down. So this is not the best market structure for AMD. So let's see, guys, if this $111 can keep acting as support. It was broke. This level was broken to the downside today. So those who have a position on AMD as of now, we need to see the bulls recapturing $111 approximately. Thank you very much. Clear understanding on AMD analysis. Not a problem. Anytime. Amazon. Let me take a look at amazing Amazon. Alrighty, goes up today 4.26%. Wow, I didn't notice that, these guys. So Amazon hit today a brand new 52-week high, $130.15. And as of now, the bulls are making a test of the 100-week moving average, which happens to be this blue line that you guys can see. Let me see if I can zoom in. Maybe you guys can see this blue line. This is the 100-week moving average. This is an important spot from a resistance standpoint. Let me zoom out here on the 4-hour chart. Nothing wrong with the chart, guys. This is a major uptrend. So Amazon is trading above its 100-day moving average, also above its 200-day moving average. We can argue, or a bear would argue here, over here, or a bet would argue over here, guys, that the 200-day moving average is downward sloping. So this implies that that the reversal of the downtrend that we can easily see on the 4-hour chart is still suspicious, to say the least. However, the chart looks pretty compelling on the 4-hour chart. So what would be the next gap for Amazon over here? Let me see. So the next potential gap, let me pull up here a 1-year chart. Let me see, guys. So we have a next gap up to 134, guys. $134 happens to be a previous support back from August of last year. Can Amazon fill this gap right away? Yes, it can do it. But first, the bulls need to take out $131, which happens to be this 100-week moving average, which happens to be downward sloping, and therefore, it is meant to act as a big and important resistance for the bulls of Amazon. How would I take a trade on Amazon, guys? I wouldn't chase it here. Jesus Christ, these WhatsApp messages just keep popping up, guys. Sorry about that. So I would wait, guys. If I wanted to buy the dip on Amazon, I would wait for a little retracement down to this 5-day moving average, which happens to be upward sloping, which is a bullish sign over here. And this 5-day moving average, aside from being upward sloping, happens to coincide with a previous resistance back from early June. So this would be a viable dip at around $127. If Amazon happens to retrace a bit and find support at $127, and if we happen to buy the dip with either shares or call options or whatever it is, and if it happens to bounce back up from $127 up to the 100-week moving average at around $130.50-ish, we are looking at a 3.50% profit trade, nothing to sneeze at. Let me take a look at the market structure of Amazon. So supply and demand. So let me pull it up here. What is going on over here? And good. this is not like the best looking market structure for a stock, but check this out, guys. The demand was decreasing, and now it seems to be flattening out, and the supply is decreasing and about to fall below average. So this implies that despite the fact that the demand was falling, it started to stabilize, and we are seeing sellers kind of walking away from Amazon. So an acceptable market structure that makes me believe that a retest of $127 could be a successful one, and therefore Amazon could be bouncing back up. Thank you for sharing your thoughts on the amazing Amazon stock. Amazing Amazon. Yeah, that's the way that Jeremy from the financial education refers to when he talks about Amazon, right? Yeah, Jeremy is such a pumper, guys. Don't believe in anything that Jeremy says. Alrighty. Can you do SMH? Yeah, absolutely. Not a problem. Let me see what other requests do I have over here. Let me see. We have a bunch of people online. UNH, Fishman. So I was taking a look at UNH earlier on today, and then I lost track of it. So it went up today 0.88%, and it closed the trading session at $479.05. Guys, by the way, if you are trading tickers such as UNH or Humana and these very big healthcare stocks, you need to keep a close watch on the ETF of this sector, XLV, healthcare. So this is a trick that I am sharing with you guys today over here. So if you want to trade, as I just said, Humana or Pfizer or I don't know, or United Health, and you guys see the sector, the ETF of this sector going down, that's a bad sign, okay? So please, before trading United Health, take a look at XLV, which happens to be the healthcare sector of the ETF that leads or that tracks the most of the healthcare stocks out there. Let me pull up here once again UNH. Let me see. United Health. Okay, so this is a major downtrend, guys. We have a downward sloping 200-day moving average. The bulls are still below a downward sloping 100-day moving average. Not a good looking chart because we are dealing with a major downtrend. The bulls have been making some sort of progress because they found support at a spot in which they were meant to find support at, 456, which happens to be a previous support and a former 52-week low for United Health back from mid-March. So the fact that the bulls, or let's say that the fact that the dip got bought up at a foreseeable spot is positive. The 5-day moving average is starting to rise little by little, so that's also positive. And the bulls are trading as of now above $471, which happens to be a previous resistance back from mid-March. So they have been making progress, but they are about to deal with a huge resistance over here at $485, downward sloping 100-day moving average. So the trade that I would be thinking about United Health would be either the bulls breaking out from 485, so let's say that they can burst above $485. The next important spot is going to be the 200-day moving average at around $500, which happens to coincide with a previous resistance back from early June. So if we were able to take a trade on United Health with the bulls bursting above this 100-day moving average, let's say that from 484 up to $403, this would be a 4% profit trade. And you guys know that this is a very explosive stock. So this gap could get filled in 1 or 2 trading sessions, no problem. Another option would be a retest of this 5-day moving average of around $470 that, as I just told you guys, is a previous resistance. If we happen to see a successful retest of this area, $470, and if United Health can bounce back up from that spot, we are looking at a 3% profit trade. The RSI on the 4-hour chart is sitting at $58. So watch out over here because this stock is still in a major downtrend with downward sloping moving averages. But 470 as support or maybe a breakout from 485 could be alternatives in order to trade this ticker. Let me take a look at the market structure of UNH. And remember, keep a close watch on the sector, the ETF, XLV, if you want to take trades with these kind of stocks. Ooh, guys, take a look at the market structure. Jesus Christ. Not looking good at all. So we have a decrease in demand, and we have an ascending supply that is about to burst above average. So take a look at how the market structure of United Health, guys, confirms what the technical chart is telling us. I just told you, this chart doesn't look good. This is a major downtrend and stuff. And if we take a look at the supply and the demand, guess what? We are confirming that this stock is in a major downtrend. Decreasing supply, so buyers kind of walking away from the stock, and an ascending supply. So I'm thinking that UNH is likely to fail at $486. That's my take. I would be buying puts actually at around that number. There you go. What else do I have over here? Can you explain the 100-week moving average and how it is used? Thanks. This is a major moving average. Let me pull up here a 3-year chart, as you guys can see. So it basically averages the closing price of any given stock during the last 100 weeks. So it is this is a major moving average that shows us the sentiment of the markets in major time frames, such as the weekly chart or the 3-year chart, in regard to any given stock. I use it in order to confirm or determine whether sellers and buyers are in control of any given stock. And in the case of, we can also make the case, I'm talking about the 100-week moving average, that the 100-week moving average is actually upward sloping. So that's hopeful for the bulls. But at the same time, it is slightly above a downward sloping 100-day moving average. So since the 100-week moving average is upward sloping, but I have the 100-day moving average downward sloping, I can make the case that if the bulls can take out this downward sloping 100-day moving average, then the 100-week moving average won't be providing such a big resistance because it is upward sloping. Remember, guys, that the slope of any moving average or the slope of any anchored volume weighted average price or the VWAP, which we use on a daily basis in order to day trade, is very important. If you guys see an anchored volume weighted average price downward sloping, that implies that money is coming out from any given stock. And if in the case of the VWAP, guys, take a look. Let me pull up here a 1 day, 1 minute chart. So if you guys are day trading and take a look here at United Health, I mean, in the case of United Health, the VWAP isn't downward sloping. But take a look at what happened yesterday, guys. This is today's trading session, and on the left, you guys can see yesterday's trading session. Take a look at the slope of VWAP, of the volume weighted average price. It was upward sloping. So what does this imply? This implies that yesterday money was coming into United Health and not leaving the stock. The slope of, as I just told you guys, any moving average, any volume weighted average price is very important. If it is downward sloping, that implies that money is coming out of that stock. And if any moving average or an anchored volume weighted average price or a volume weighted average price is upward sloping, that implies that we have a positive inflow of money into that given stock. No, I haven't gone over Apple. Let me do SMH that Moises is asking about. Let me see. The semi and mind you guys, I know Moises. He's shorting NVIDIA, so he's asking about SMH because as of now he's shorting NVIDIA. So that's the reason why he's asking about SMH. Okay, so the semiconductor ETF went up today 0.50% and it closed the trading session at $150. So nothing wrong with the chart, bro. So we have an upward sloping 200-day moving average, upward sloping 100-day moving average. We can make the case that the bears are starting to make some progress because the 5-day moving average is starting to downward slope, which is hopeful for the bears. Let's just put it that way. But this is just another uptrend. And since you are shorting NVIDIA, bro, you can make the case that this ETF is a bit far away from home base. Remember the 100-day, when I talk about home base, I am talking about the 100 DMA and the 200 DMA. So yeah, I mean the SMH, this ETF is 14% above its 100-day moving average, and it is trading 30% above its 200-day moving average. But there's nothing really wrong with this chart. And the bulls need to take out, once again, they need to burst above $151, which is a previous resistance back from late May. In the case of a retracement, I would be expecting buyers to step in near $142, which is a previous support back from early June. But this would imply, an $8 drop, and this could happen. This could very well happen in a method of 1 or 2 trading sessions. If you, and since you're shorting NVIDIA, if you happen to see $142 on the SMH, this is a spot from which the bulls could be bouncing back up. So this would be this would be a sign for you to close your NVIDIA short. But nothing wrong with the SMH. If I had to make a guess here, guys, I would say that we might be about to see another 52-week high for the semiconductors at around $157. Absolutely. No, I haven't gone over Apple. Let me take a look at Apple. Let me check over here, guys. We are 31 minutes in. Okay, Apple. Sure. Let's go ahead and take a look at good old Apple. Let me take a sip of Sprite here. Well, take a look. A similar chart relative to the semiconductor ETF. It goes up today 1.65%, and it closed the trading session at $187. Let me take a sip here, guys. There you go. Okay. So, nothing wrong with the chart. This is a major uptrend. Apple almost hit a brand new all-time high today at around $188. I am going to zoom in here on the 4-hour chart. Again, we have an upward sloping 100 DMA, upward sloping 5-day moving average. Nothing wrong with this chart. I would be expecting, if I wanted to take a trade on Apple, I would expect some sort of retracement down to $185. This is an important spot. $185 is a previous resistance back from early June. Previous resistance that now could be acting as a new support from $185 up to $188. This would be a 2% profit trade. Another potential scenario, if we keep seeing some sort of rotation in the markets with money coming out from the big winners year to date. So with money coming out from technology and communication services and consumer discretionary and so forth. So in other words, if we happen to see downwards pressure or further, we can say that downwards pressure over the Qs, over the triple Q, if Apple happens to break this support of $185 to the downside, then we have room up to $181, which is a previous resistance back from June 9th, and this is also a previous resistance back from early June. So this could be a short with Apple from 185 down to 182 approximately. So very important spot for Apple, $185, and there's nothing, but absolutely nothing wrong with this chart. Obviously, guys, since Apple is trading pretty much at an all-time high, let me pull up the 3-year chart. Yeah, correct. So if Apple takes out, guys, if the bulls burst above the new all-time high at $189-ish, they enter in no man's land. So how higher can they go? I don't know, 190, 195. That's anyone's guess. But absolutely nothing wrong with this chart. Let me take a look at the market structure of Apple. So supply and demand. Let me see over here. Apple Incorporated. What do I have here? Let me see. Not a problem. Anytime. And we can see a market structure that seems to be similar to Amazon's. So the demand dropped. It kind of flattened out. And the supply is decreasing and about to fall below average. So we can confirm the 100% from a market structure standpoint that the bulls of Apple are in absolute control of the stock. So as I just told you guys, and you know that this is the most that Apple is the most important stock on market cap wise in the world. So this stock represents something like I don't know 6% of the total market capitalization of the S&P 500. So needless to say, if the markets, if the rug gets pulled out, Apple is very likely to see lower prices. But there's nothing wrong with the chart. We can confirm from a market structure standpoint that buyers are in absolute control of the stock. So 185 is going to be a very important spot for good old Apple. Cecile Vernon. How about Procter & Gamble? Is that Procter & Gamble, PG? Let me see. Yeah, Procter & Gamble. Defensives, consumer staples. Goes up today 0.34%, and it closed the trading session at $149.99. Guys, you have to be careful here. I mean, this is not a sexy stock. This is not a stock that is going to run $3 or $4 on one single trading session. The problem that we have as of now with consumer staples is that we have treasury bonds paying a dividend or yielding something like 5%. When it comes to 1 year bonds and I don't know 6 months, a 6 month and stuff, a 6 month bond and stuff like that. So most of the investors that like these kind of defensive stocks, such as Procter & Gamble and Kimberly-Clark and I don't know PepsiCo and Coca-Cola, they come for the dividend. But as of now, we have a big competitor when it comes to the fixed income market. So these are stocks that, since we have yields going higher, are likely to remain around these prices. I don't see a bullish case when it comes to consumer staple stocks unless the markets believe that we're heading into a severe recession and stuff like that, and most market participants start buying consumer staple stocks. So I'm not expecting neither Procter or Gamble or Coca-Cola or PepsiCo or any of those stocks, defensive stocks, to do much in the upcoming weeks, because as I just told you guys, the yield of treasury bonds is way more attractive than the yields or the dividend that these stocks offer, taking into account that when it comes to a treasury bond, those are pretty much investments that don't imply any risk at all. Procter & Gamble. So we can see P&G trading above its 200-day moving average, 100-day moving average. The 5-day moving average is upward sloping, which happens to be positive. And there is a next gap over here up to $154. I can see the RSI of Procter & Gamble sitting at 67 points on the 4 hours here. This is healthy. So if we happen to see a process of consolidation of Procter & Gamble above the upward sloping 5-day moving average, or above at around, I don't know, $149, this could be a sign that the bulls are gathering momentum in order to make a push higher, in order to fill this gap up to $155, which happens to be a previous resistance back from January and December of last year. But mind you guys, this is a very slow stock. So don't expect Procter & Gamble to fill this gap up to $155 on one single trading session or 2 trading sessions. This would take some time. So this is a stock that you can trade, thinking about a swing trade, but I wouldn't touch these kind of defensive stocks for a swing trade, because as I just told you, there is a big competitor there is a very big competitor out there for these kind of stocks when it comes to treasury bonds. Big competitor. Let me take a look, by the way, at the market structure of Procter & Gamble. Let me see over here. What do I got? Procter & Gamble. So we have a stable demand, as you guys can see. So buyers remain, in the same amount. Let's just put it that way. But check this out, guys. The supply is rising and above average. So I'm thinking that sellers are starting to gain control of the stock of this company, and this area of $150 is going to be very important, If the bulls cannot burst above 150 bucks, then I think that we have lower prices coming for Procter & Gamble, maybe down to this 100-day moving average near $146. Did I go over Tesla? Didn't I? I don't remember. No, I haven't, right? Jesus. I'm tired, guys. You know, you guys know that I do live stream for my Patreon throughout the whole trading session. So when I go live with you, I'm super tired. Tesla goes up today 1.92%, and it closed the trading session at $264. So, guys, the push to the upside that we have seen over here has been massive. Tesla gained since early May and to this date 76%. And I told you last week that the problem that we have over here is the options market. So what is going on over here? That these call options of Tesla are extremely expensive, and most of the calls that are being bought as of now are way out of the money. Yesterday, I saw call options at around 350 bucks. So the problem that we have here is mechanical, because Tesla seems to be reversing this the horrible downtrend that we have seen in the case of Tesla since something like late last year. I wouldn't talk about a definite reversal of the downtrend, because we still have over here a downward sloping 200-day moving average. But this is the problem, guys, that we have way out of the money calls that are being bought up as of now, and we didn't have a lot of pressure over the market makers in order to buy new shares of Tesla in order to cover the new call options that they are selling. Because you guys know that whenever we buy a call option, most likely we are buying that call option from a market maker. So if we happen to see a lot of call options buying when it comes to any given ticker or any given stock, then if the market maker notices that they are selling a lot of call options at the money or in the money, then they are being forced to buy shares of that underlying stock in order to cover the naked call options that they are selling. So as of now, we didn't have a lot of, let's say, we didn't have a lot of buying pressure unless we start to see more call options buying at the money or in the money. But guess what? Those calls are extremely expensive. So this is a problem for Tesla. So big level over here at around $280. Can the bulls take it out? Maybe if this, let's say, correlation of call options buying changes. If we start to see more call options buying at the money or in the money, that could be forcing the market makers to buy new shares of Tesla. But since Tesla has run up, guys, 70% in a matter of a month and a half, so the market maker is saturated of Tesla shares. So this is going to be an interesting one. 280 obviously is the same gap, and we have a big level here at around 255 bucks. I am going to pull up here a 3-year chart. Why is 255 bucks very important? Well, because 255 bucks happens to be a previous resistance back from early April of 2021. So Tesla closed today at 264 bucks. Keep a close watch on 255 and a retracement. And if you guys happen to confirm from a technical standpoint that this area is acting as a good support, Tesla could be bouncing back up. So first we have a first gap up to 269 bucks. This is a previous resistance back from June 13, just a few days ago. And if the bulls can take out 265 bucks on good volume and momentum, then yeah, why not? Maybe we could be about to see a new retest of $280. So this is a good looking chart. If we analyze Tesla on the 4-hour chart, so the trend seems to be, the downtrend seems to be getting reversed. The bulls actually put on over here a higher high, but we still see a downward sloping 200-day moving average. So I would say that we don't have a definite reversal of the downtrend. Let me take a look at buyers and sellers over here. Supply and demand of TESI. What is going on over here? Let me see. And there you go. So take a look, guys. Very good looking demand and supply. So the demand is skyrocketing way above the supply. However, the supply is starting to rise little by little, and it could be bursting above average sooner rather than later. So nothing wrong with neither the chart nor the market structure, other than that we are seeing a downward sloping 200-day moving average. The only issue that the only negative issue that I can point out over here is the mechanical one. So we need a lot of collapses buying at the money or in the money for the party to keep going in the case of Tesla. Alrighty. How is Nike looking? I took a look at Nike today, right? Someone asked me about Nike. Nike, there you go. Let me see. It went up today 0.44%, and it closed the trading session at $110.46. Big level over here, guys, $112. 200-day moving average, pretty much coinciding with the 5-day moving average. If the bulls can take out $112, there's a gap up to the 100-day moving average, $120. This would be from $112 up to $120. This would be a 7% profit trade, nothing to sneeze at. So this could be a breakout trade. We can see the RSI of Nike sitting at 52 points on the 4-hour chart, very healthy. From a technical standpoint, we can make the case that Nike is neither oversold nor overbought. So yeah, this could be a breakout trade over here, or maybe. What about a retracement down to, we have a previous support here at around $108. If Nike happens to find support at $108 and it happens to bounce back up from $108 up to $112, this would be a 4% profit trade pretty much. So not a good looking chart because Nike is trading below the 100-day moving average and also the 200-day moving average. But the buyers have been making progress over here. And yeah, why not? We could be about to see $119. And on top of that, I think that in China they are cutting rates. So China, or the Central Bank of China, is trying to stimulate that economy. That could be a potential positive catalyst for Nike. And let me take a look at the demand and the supply of Nike. Do I have that? Yeah, I should have that market structure available. And take a look, guys. So the demand is rising along with the supply. The supply is above average. But we can say that we have a tie over here, guys, between buyers and sellers. So we have a struggle between buyers and sellers because we have an ascending demand with an ascending supply as well. So this difference could be figured out if the bulls can take out this 200-day moving average at around $112. I already went over SOFI. Ellen, if you can, rewind a bit, the live stream, you are going to see the analysis of SOFI. C3AI. They had an event today, right? Let me take a look, guys. There you go, 48 minutes in. I'm going to do 1 or 2 more stocks, guys, and I'm going to wrap it up. I'm very tired. C3I, it went down today 4%, and it closed the trading session at $37.44. This is an easy one. The next important spot, $35, which happens to be a previous resistance back from late March. This would be a spot, we are seeing over here a previous resistance that now is meant to act as a new support. Big level. If the bulls can find support at around $35, they could be bouncing back up to $39, which happens to be a previous resistance back from early June. From $35 up to $39, this could be a 10% profit trade. And you guys know that this is a very volatile stock that could go up or down 10 or 15 bucks in one single trading session, no problem. So $35 could be a buy over here. We still have an upward sloping 100-day moving average, semi-upward sloping 200-day moving average. So from a major time frames perspective, there's nothing wrong with the chart. We are seeing some sort of healthy pullback. We have a downward sloping, semi-downward sloping 100-day moving average, which implies that sellers have stepped in over here. But this stock is still in an uptrend. It is still under the control of buyers. So $35 could be acting as support, probably. So we can still say that this is a healthy pullback because this stock went too far too fast. Let me take a look at the market structure of C3AI. The future of mankind, guys. Some people say that this company is the future of mankind. How about that, huh? So take a look, guys. Yeah, sellers have been stepping in. We have an ascending supply that bursts above the average. The demand is still rising, which is a good sign, but the supply shows us clearly that sellers already started to step in. So $35 is going to be an interesting spot for a good bull-bear battle for C3AI. Absolutely, anytime, not a problem. So the last stock today, which one is going to be? Dollar Tree, DLTR. This is Dollar Tree, there you go. Consumer staples again, guys. So went up today 0.91%, closed the trading session at $144.07. Below a downward sloping 200-day moving average, a flattish 100-day moving average. The 5-day moving average is rising, which is a good sign. This implies that buyers are starting to gain control in minor time frames. The bulls burst above the 100-week moving average, and maybe, guys, we can make the case that the bulls of Dollar Tree could start to work on some sort of bullish flag pattern over here. Not an academic one, but maybe some sort of bullish flag pattern. Take a look. Not an academic one, I know. Don't complain about that. But take a look at how the lower line of this quote-unquote bullish flag pattern would be coinciding with a previous resistance back from late May. So what happens if the bulls happen to complete this non-academic bullish flag pattern? They could be bursting above both the 100-week moving average and also the 200-week moving average, in which case they could be filling the next important gap up to $149, which is a previous resistance back from early April, and this is also a previous resistance back from early March. If we could take this breakout trade from 145 up to 140.50-ish, this could be a 3.26% profit trade. So this is an encouraging short, and let's see if this bullish flag pattern happens to be completed. Or maybe, guys, this could also be another alternative. A pullback down to the lower line of this bullish flag pattern and a bounce back up. So from $141.50 up to the upper line of this non-academic bullish flag pattern up to $145. This could be a 3% profit trade. Let me take a look at the market structure of Dollar Tree. So sellers and buyers, what is going on over here with good old Dollar Tree? And here we go. Take a look. Take a look, guys. We can confirm from a market structure standpoint what the 5-day moving average is telling us, because the 5-day moving average is starting to rise, or it's rising actually, and that implies that buyers are making progress from a minor time frames standpoint. So we have an ascendant demand that is way above the supply. The supply is also rising and above average, but below the level of the demand. So this is an encouraging market structure for Dollar Tree. Watch out for this. We have two possible scenarios, as I just said: a retest of $142 or a breakout from $145-ish. There you go, guys. How about that? I'm going to wrap it up. 54 minutes. I'm exhausted. You guys enjoy the rest of your day. Keep a close watch on my Discord channel. You guys know that I am calling balls and strikes when it comes to the SPY throughout the whole trading session. So thank you very much for coming over. And I will see you guys on Discord. And I will see you guys next Thursday. Remember that I am live streaming for you every single Thursday. Okay? Thank you very much, guys. Take care. Bye-bye. Take care. Enjoy the rest of your day. Bye.